مساء الخير أيها الحضور الكرام، شكرا جزيلا على حضوركم هذه الليلة. محاضرتنا اليوم هي بعنوان الجديد في قوانين ضريبة الدخل للأفراد لعام 2023. محاضرنا لهذه الليلة هو الأستاذ صادق العزاوي، أحد مؤسسي هذا المنتدى المرموقين. الأستاذ صادق يأتي من خلفية تعليمية ذات تخصص في مجالات المحاسبة والضرائب والتسويق ودراسات الكمبيوتر. أن رحلته المهنية شملت تولي العديد من المناصب الرفيعة في مجالات عديدة كالمحاسبة والمراقبة المالية والإدارة المالية في عدد من الشركات الكندية، ولسنوات عديدة قام بتقديم خدماته لعدد من الشركات المحلية والدولية، مستفيدا من خبرته في مجال الأعمال والمحاسبة، بالإضافة إلى إرشادات حول قضايا مثل هيكلة الشركات وتنظيم المؤسسات وضمان الامتثال لقوانين هيئات الضرائب الفيدرالية والإقليمية، بالإضافة إلى استراتيجيات تعزيز هوامش الربح وتقليل التكاليف وتحسين الالتزامات الضريبية. وهو يقدم أيضا خدمات استشارية متنوعة، وكذلك يقوم بمساعدة الشركات في فهم البيانات المالية واتخاذ قرارات مبدئية على أسس صحيحة من خلال استخدام الأدوات التكنولوجية المتقدمة. ويتضمن ذلك خدمات إدارة التدفق المالي وتخطيط الأعمال والتنبؤ المالي بهدف تعزيز نمو الأعمال. وفي عام 1991 أسس شركة MMS Accounting Corporation التي صممت خدمات محاسبية متخصصة للشركات الصغيرة والمتوسطة في كندا. وقد قامت الشركة بتوسيع خدماتها لتشمل الاستشارات الضريبية والإيداع لكل من الشركات والأفراد. وفي عام 2022 أطلق شركة ماتريكس بزنس أند داتا مانجمنت ليميتد، والتي تركز على تقديم الخدمات الاستشارية والتحليل المالي. هذا كل ما لدي من تقديم لخبرة الأخ صادق العزاوي. ستبدأ المحاضرة الآن ولمدة 40 دقيقة، يتبعها فترة أسئلة وتعليقات، وسينتهي اللقاء في الساعة 10:30. يرجى وضع الأجهزة على حالة الميوت. تفضل أستاذ صادق، حظا سعيدا. شكرا.
شكرا عزيزي أبو محمد. مرحبا بالجميع. المحاضرة اليوم طبعا راح تكون بالإنجليزي، بس الأسئلة إذا بعتكم بعدين بعد المحاضرة أنه ممكن أن نخليها تكون همنا بالعربي. موضوع المحاضرة اليوم مثل ما قال الأخ محمد ما هو جديد في قوانين الضريبة الكندية بالأخص، مع اعتذار الأخ دكتور ياسين. بس همنا شكرا على حضوره، وإذا عنده أي أسئلة همنا ممكن أن نجاوب، يجوز نخليه يحول على كندا. المواضيع اللي راح نطرحها اليوم راح تشمل الضرائب في كندا. 23 tax update will cover also benefits, credits, and deadlines, and then we will open the session for questions and answers. So I do have, because it's a professional presentation, I have to start with a disclaimer. The information contained in this presentation is intended for general information purposes only and does not constitute professional advice or establish a client-consultant relationship. While we strive to ensure the accuracy of the contents, we make no representation or warranties of any kind, express or implied, about the completeness, reliability, suitability of the information. The presentation is the property of MMS Accounting Corporation. It contains information gathered from multiple sources and intended to provide general knowledge about tax and tax savings programs in Canada. You may contact our office if you need advice, or if you have any questions or you need more information. So the first part will cover the taxes in Canada, and we'll start with the saying that says, in this world nothing can be said to be certain except death and taxes, and that saying belongs to Benjamin Franklin. So the Canadian tax system, what's the Canadian tax system? The Canadian tax system is a critical element of the country's fiscal policy. It helps in funding essential government services and programs. It is a complex system that involves multiple levels of government and various types of taxes. Canada's tax system is a multi-tiered system with taxes collected by 3 levels of government: the federal, provincial, and municipal governments. Tax revenues play a crucial role in funding essential public services and programs. Some key areas where funds are allocated include healthcare. Canada has a universal healthcare system. It's funded primarily through tax revenue, which ensures that health services, that all citizens have access to essential health and medical services. Another, the education program, also tax dollars are invested in the education system from kindergarten to post-secondary institution. This ensures a well-educated population and workforce. Taxes also pay for social programs. The social programs, they do provide social safety nets. It covers unemployment benefits, pensions like CPP, OAS, child care support. These are all funded through revenue from taxes. Infrastructure, investments in infrastructure projects like roads, bridges, and public transportation are made possible through tax dollars. Because public transportation is still like users pay for it, but it is still funded through the government through subsidies. Public safety is the other aspect where tax dollars goes to, which funds law enforcement agencies, emergency services, and the justice system. Of course, this is just partial items that the tax dollars covers. Just I need to highlight them because all these we can feel them and see them. Now, the types of taxes in Canada, there are different types of taxes which support each program and services. Some of those types of taxes are personal income tax. The Canadian tax system is based on residency status for tax purposes, not necessarily means you are a resident of Canada physically to be considered as a resident for tax purposes or vice versa. There are several ties that you need to have to be considered as a resident of Canada for tax purposes. The tax year usually runs from January 1st to December 31st. All Canadian citizens that are over 18 are supposed to or should file taxes. Sometimes people who are under 18, and if they have income, they do need to file also income tax return. The other source of taxes is the corporate income tax. Corporations in Canada, including nonprofits and inactive corporations, pay tax on both profits and on capital. Corporate taxes are levied at the federal level as well as on the provincial level. The corporate tax rate therefore varies not only by type and size of the corporation, but it also varies by province of operation. The other tax is the property tax. Property tax is tax on asset. If you own a home in Canada, you will need to pay property tax on it. Similar to other tax programs in Canada, the amount you pay will vary by location. Property tax is collected on the local level. So that's by the city or the town or the municipality that your residence is in. That's where you would pay those property taxes. Property taxes does cover education, water, snow removal, garbage collection, policing, and fire protection. The fourth type of taxes is the sales tax. Canadians are taxed on consumption of most consumer goods and services. The federal government's goods and services tax, GST, and the provincial government they have their own provincial taxes, which is the PST, are both applied on most goods and services consumed in Canada. Some provinces have GST and PST, and some of them, they are combined into a harmonized sales tax, the HST. Some provinces, mainly Alberta, they do not have a provincial sales tax. Now, the income tax rates in Canada, I'll cover in this section. The Canadian tax system has a graduated or progressive tax system, which means that the more income you make, the higher the income tax rate will be. And taxes do vary by province and territory. It can be confusing to figure out the tax brackets, as they only depend on the amount of income that you earn, but also the source of the money, where it's coming from. On top of that, the provincial tax brackets, they differ from province to province. The final tax rate that you would pay on your income will be an average. And of course, you would take into account the federal and provincial tax bracket rates. The one exception to the graduated income tax rates are the corporate taxes. There are only two levels of corporate income taxes in Canada. So there is the first one is the small business tax rate, which applies to Canadian controlled private corporations. The rate for that is 9% federally plus the provincial rate. In Ontario, it's 3.2%. So the total that you pay on levied on the small business corporations are 12.2%. The general income tax rate, that's for any company that makes more than $500,000 annually in net profit. The rate federally is 15%, plus the provincial rate in Ontario, which is 11.5%. So the total will be 26.5%. Now, those tax rates, they do apply on active income, especially the small business tax rate. If the small corporation is also has income, it generates income through passive income, then the general corporate tax rate will apply in that case. The active income, sorry, just have to cover that. The active income is basically is the main source of income for the corporation from its daily activities. The passive income, it's not the main business activity. Let's say if the company has investments income, including rental income in some situations, that could be considered as a passive income, and then the general corporate tax rate will apply on it. So the government provides tax breaks to money earned from some sources, like capital gains, for instance, which is only taxed at 50% of the gain. The types of income that are subject to tax, the first one, which is other income, this includes employment income, commission, wage loss placement, old age security, Canada pension plan, and other pensions, and also on interest income. Capital gains, if you have capital gain when you sell a property or an asset, then capital gains will apply on it if you, of course, if there are any gains on it. There is also a tax on eligible dividends. Eligible dividends are dividends that you get from resident Canadian corporations that are listed on the stock exchange. Let's say like Bell, RBC, TD, or all those big banks, they're all public corporations. So any dividends that you get from them is subject to the eligible dividend tax rate. Ineligible dividends, that one is from dividends that you get from small business corporations, the CCPC, which is the Canadian controlled private corporation. The the tax rate on the ineligible dividends is a bit higher than the eligible dividends. Also, the other income that's subject to tax is general corporate income, which is that we just covered, that goes at 26.5% in Ontario, and then the small business corporate income, that which covers the income that's up to 500,000 in net profit, will be subject to the small business corporate income tax rate. Now, not only income is taxable in Canada. I'll just give you some examples of both taxable and non-taxable income. Taxable income will cover employment income, self-employment income, dividends, interest, income from selling stocks, bonds, and other investment property, pension income, being from Canada or outside of Canada, withdrawals from RRSP, foreign income, and corporate income. Of course, that's on the net profit, which is going to be like minus expenses. Non-taxable income, this will include most lottery winnings, most inheritance and gifts, child benefit payments, GST, HST credits, most provincial government tax credits and benefits. Like here in Ontario, we have the Trillium benefits. They are not subject to tax. Payouts from a life insurance policy, school scholarships, like anybody like in university and they get scholarship, they are not subject to tax. Withdrawals from your tax-free saving account, and strike pay from a union. So now we'll cover some of the tax updates that took place actually in 2023, and also what's going to be expected in 2024. So in 2023, some changes were brought forward by the federal government to help Canadians save money on and pay less taxes. So we'll go through some 10 tax changes. We'll cover them in a bit of detail in the next slides. There was changes to the basic personal amount. Also, there is changes to the federal tax bracket rates. They introduced a tax-free first home saving account, home renovation credit, RRSP limit increase, TFSA limit increase, CPP contribution tax rate increases, EI contribution limit increase, lifetime capital gain exemption increase, and residential anti-flipping rules, undersold housing tax. This is something new that started in 2022. It will apply to rental properties, and the idea behind it was to curb foreign investors, and which caused like a loss of increases in rental fees and also in house prices. The other item is the alternative minimum tax. So the personal amount, it could be considered as a good news, because basically the higher the personal basic personal amount goes up, which means that up to that level there is no taxes. So for 2023, the first $15,000 on the federal level is not subject to any taxes, and which is going up also in 2024 to $15,705. The provincial tax bracket is a bit lower, so there would be some taxes in between those two amounts. So this is just to give you an example. The federal tax bracket, what we have for the tax rate itself hasn't changed. So for the first bracket, it's still at 15% federally. And the highest one is 33% for income for 2024 for income over $247,000. In 2023 is $236,000. This is just for information purposes. So when I get the PDF copy of the presentation, you can look it over. So this has the combined tax brackets for the federal and the Ontario tax bracket. It will show tax for 2023-24 on regular income, on the capital gains, and eligible and non-eligible dividends. Now the tax-free home saving account it's a new program to help first-time home buyers save for their for the down payment for their first home. It is a registered saving account. It does act like an RRSP when you register for it and contribute to it. But when you withdraw money from it, it acts as if it's a tax-free saving account. So there's not going to be any taxes that you pay on any income earned inside the plan. When you cash it out to use it as a down payment for your first home. This program is available for Canadians who are 18 years of age and over that haven't owned a home or lived in a home that they owned by themselves or their spouse or common law partner for the past 4 years. So it's like if you haven't owned a home in the past 5 years, you are eligible for it. It can remain open for 15 years or to the year that a person turns 71 years old, whichever comes first. Eligible Canadians can make tax-free withdrawals for a single property purchase, and then there is not going to be any tax on any growth in the investment. The lifetime contribution is set at $40,000 with annual contribution limit of $8,000. If you contribute, let's say in the first year, just $6,000, then the next year you can contribute up to $10,000 because any unused amount will carry forward to future years. You can transfer funds from your RRSP to your first home saving account. You can transfer it tax-free. And should you not use it, let's say, as a down payment for a home, you can transfer all the balance that's in it to an RRSP without any penalty or any tax obligation on it. But you are not supposed to over-contribute. Any over-contribution will be subject to 1% per month penalty, which could be hefty if you go over the limit. So the next one we'll cover is the multi-generation home renovation tax credit. Nowadays, like most Canadians, like families, you would find multi-generation living in the same household. That could be like you could have, let's say, the parents, the grandparents, and the children still living in the same house. So this program would enable, especially the elderly, to renovate their house to have a secondary unit in it so they could live independently, which provide them with up to $7,500 in the renovation tax credit to set up that secondary unit. So the secondary unit should be like self-contained housing unit with a private entrance with its own kitchen, bathroom, and sleeping area. So you cannot, let's say, just do a renovation on the first floor by adding a bathroom or something, so the elderly can live in it. The other one program is the home accessibility tax credit. So this it has a limit of $20,000. Which provide you with 15% tax credit of $3,000. This credit is non-refundable, not like the multi-generation, which is a refundable tax credit. So non-refundable, usually, like if you bring your taxable income to zero, then it's not going to create a tax refund for you. So you use whatever amounts you need to use to bring it down to zero. The home accessibility tax credit is available for individuals to make it the house more accessible, especially again, that's for like whether it's going to be like for an elderly person or if you have somebody with disability, you can benefit from this tax credit. The RRSP and TFSA contribution, so there's going to be an increase to the limit, the maximum limit that you can contribute every year for 2023 is going to be $30,780, and going up in 2024 for $31,560. These numbers are always adjusted for inflation. The TFSA for 2024, the limit is going up to $7,000 from $6,500 in 2023. If you need more information what those programs mean, we can cover them in the Q&A session. Now, the CPP contribution rates are going up, which basically would mean that you're going to be paying more. So you might pay less on your income tax because of the changes, the increases in the basic personal exemption amount, but you'll unfortunately you're going to have to pay more on your CPP up to of course the maximum contributions for the year. For 2023 is going up to 5.95 of your wages annually, and the maximum contribution is $3,754.45. If you are self-employed, it's a double whammy for you because you have to pay both of them, the employee and the employer portion. The maximum contribution pensionable amount for the year is $63,600. So it will stop at that figure. Whenever you hit that figure in your annual earnings, then no more CPP deductions will be made from your paycheck. In 2024, there is going to be an enhanced CPP is going to take effect, which basically higher income earners will need to contribute more for their CPP. It's going to add another 4% on top of the regular maximum contribution. It does also mean that when they get CPP, once they retire, they are going to get even more benefits from it also. Next, the EI also is going up. EI is supposed to be like whatever amounts that whatever contributions are gathered from employees, it will be distributed to the when they need them, when they go on employment insurance, then they're going to be able to collect it. The government doesn't use these funds for any other purpose other than cover use it for this employment insurance purposes. In 2023, it is going up to 1.63, and the maximum annual amount is going to be $1,002.45. The employer, of course, they pay 1.4% of what for every dollar that's deducted from the employee's pay, the employer would pay $1.40 for that employee. The maximum insurable earnings for 2023 is $76,875, and it's going up to $79,000 in 2024. So on your first paycheck of 2024, you're going to see more CPP and EI deducted from your pay, but less income tax. Depending on your income, you might be even or you might be a little bit worse off. Lifetime capital gain exemption, that one is going up for 2023 from $913,630 for 2022. 2023 will go up to $971,190. So basically, like half of that is non-taxable. So let's say if you sell an investment property or your shares in a Canadian controlled private corporation, you're only going to pay tax on half of the capital gains on it. The figures for 2024 hasn't been announced yet. That's why I don't have them here. the residential anti-flipping rules. So this was part of the 2022 federal budget. It targets individuals who purchase a house or any type of residential property and sell it for much more than what they purchased it for, if the sale occurs within 12 months of the original purchase. So that's what it is they want to target the people who buy homes that say they live in it for a few months, and whether they do some renovations on it or not, and then they just flip it, sell it again, they are not going to be able to claim the principal residence capital gain exemption on it. They will. They also. They are gonna do. It's gonna be. They have to pay a tax rate on it, which is equivalent to business income, because like when you're flipping, basically the CRA will consider you as you are doing these things as a business rather than buying a home to live in it and you have to sell it. Of course, there are exceptions for the rule. If it was for, you have to sell the house for life events, like if you get a divorce, if you get a job offer in a different province or a different city and you have to sell your house to move closer to your work. Again, so like property flipping involves purchasing residential property and reselling it in a short period of time to realize a profit. This also includes selling the rights to purchase a property before its official sale, including assignment sale. This is something new, so that you have to watch out when you buy a property and then want to sell it on assignment basis. So you need to make sure that you are going to sell it. You need to have it own it for more than 12 months and then sell it, then you're going to be okay. And this tax will not apply to you. So the flipped property it is a housing unit that needs to be located in Canada, that you owned or lived in it for less than 365 consecutive days prior to the sale. As I mentioned, there are the exceptions. If the property, like if you have to sell it in a situation where there are life events such as death, divorce, safety issues, illness or disability, relocation due to education or employment, if you are insolvent or there are other causes. The underused housing tax, this will affect people who have rental properties, and especially if they own it under a corporation or in partnership with others. The CRA weren't too clear on it, what they would consider a partnership. But for us, when we are doing the personal tax return, even like say, if you own the property between yourself and your spouse, we have to file this return and request an exemption. So you're not going to be subject to any tax, but it needs to be filed because the penalties on it are hefty if you don't file the return. It did start apply to the 2022 tax year. The deadline was supposed to be April 30th. It was extended to May 31st and then extended again to October 31st. And now they have extended it actually to April 30th, 2024. So both 2022 and 2023 are going to need to be filed at the same time when you do the tax return next year. It is going to apply, let's say, if you are a resident Canadian and you have rental property that you own it with your spouse, you need to file it and claim the exemption from it, because it's targeted towards non-Canadian, non-residents who are buying homes for investment property and just leaving it empty without even renting it, or they want to just keep it till the prices go up and then they sell it. So this way they will curb the increases in monthly rent for people who can't afford to buy a home and they are renting. The penalties initially was 5,000 for individuals and 10,000 for corporations if they don't file the return. In the last fiscal update, which was done, was it 2 weeks ago or a week ago, they dropped it to 1,000 for individuals and 2,000 for corporations. The alternative minimum tax, this basically applied. I'm not going to cover it really too much because it's applied to high income earners. Anybody who's going to be making like more than the exemption amount, which is $173,000, it will start affecting them. Basically, the CRA or the federal government wants people who are making lots of money to pay their fair share of taxes. It is a bit complicated, the way it's calculated and what types of income would fall under it. Since it doesn't really apply to the average person, there is no need for us to go through that at this point. So now we'll cover some of the benefits since I don't really have that much time left. So the benefits that are available to Canadians now, the first-time homebuyers tax credit. This one is going up from it was 5,000, now it's 10,000, which will basically give you a 1,500 tax credit for eligible first-time homebuyers. The one-time inflation payment that was paid to low to modest income Canadians, they received a one-time payment of $234 for a single person and $467 for a couple with 2 children. Enhanced Canada Workers Benefit, again, this is targeted towards low-income Canadians. The payments has increased and they are starting to pay it on a monthly basis. Dental care, which became available to youth. They will cover if the family income is under 70,000. Between 70 and 90,000, the payment is not going to be 100%. But if your income, if the family income is more than 90,000, then there will not be any dental care coverage for them. Old age security for seniors 75 and older, there was a 10% increase in the old age security payments. Canada Child Benefit, which provides about $7,000 for children under 6 and up to $5,900 for children with over 6 and under up to 17 years of age in annual benefit. And as I mentioned, this is a non-taxable benefit. Home accessibility tax credit, that's also we covered it. That provides the expenses limit of $20,000, which will provide you with the tax credit of up to $3,000. Now, there are some changes to the Canada Pension Plan. Canada Pension Plan, of course, like it is a pension for Canadians that they can apply for it when they turn 65. You can apply earlier when you turn 60, or you can delay it till 71, and the payments will increase if the longer that you wait till you apply for it. The pension plan provides a monthly taxable benefit to individuals when they retire. Also, there is a disability benefit, which is offered to individuals who made enough contributions and cannot work at any job due to the disability. There is a post-retirement pension plan, which is a benefit for individuals who continue to work while receiving their CPP retirement pension. Survivor pension, which is an amount given to a surviving spouse or a common law partner of a deceased contributor. Death benefit is a one-time payment to the estate of the deceased contributor to help with the funeral costs. Children's benefit is similar to the disability benefits of the parent is receiving disability benefit, and the children might qualify for the children's CPP payments. Pension sharing allows spouses or common law partners to share their pension benefits to lower taxes. If there is a case of divorce or separation, then the credit splitting, which allows the CPP contributions to be split equally between spouses when they divorce or separate. Some of the tax changes, like we covered, the old age security that's available to seniors 65 and older. You don't need to apply for it. You just need to file your tax returns, and then you'll start receiving it when you hit 65. Guaranteed income supplement is a non-taxable income supplement available to low-income old age security pensioners. It's not like the old age security pension, which is taxable. The GIS is non-taxable. There is also the provincial government provides this guaranteed annual income system, which is a non-taxable income supplement available to low-income Ontario pensioners. And then the allowance for people aged 60 to 64 is a non-taxable benefit available to the spouses or common law partners of guaranteed income supplement recipients. Now, benefits for seniors, there is in Ontario, I'm going to cover since most of us are here in Ontario, there is the Ontario Electricity Support Program, the Ontario Seniors Public Transit Credit, Home and Vehicle Modification Program, Ontario Seniors Care at Home Tax Credit. This is something new that they started when COVID started to encourage seniors to remain in their home rather than go to old age homes. Ontario Drug Benefit, which is available to low-income earners. Ontario Seniors Dental Care Program, also available for seniors with low income. The Ontario Senior Homeowners Property Tax Grant, which is like $500 a year if you qualify for it. And you get it as part of your tax return. The guaranteed income levels, just to give you an idea, what can you expect if you are between 65 to 74, the monthly payment, the maximum monthly payments you will be able to get from all the programs that are available on the federal and provincial level. If you are a single, it's $1825.05. If you are a couple, per couple is going to be $1409.69. The payments, because they are subject to inflation increases, so the payments from July to September of 2023, you see an increase, and same thing with October to December 2023. There is also an increase to the amount that you receive. So let's say in here we have 1825, and then for the fourth quarter is 1847.69 amount you will be receiving. Important dates that you need to keep in mind. So registered disability savings plan is December 31st. First home saving account is also December 31st. RRSP contribution 2024 is a leap year, so the deadline is February 29. And the deadline to pay any HST on business income for sole proprietor is March 31st. And individual income tax payments needs to be made by April 30th. Same thing with the filing. The foreign income verification statement, if you own any property or investments outside of Canada that's more than $100,000 in value, you need to file that Schedule T1135, and the deadline for it is April 30th, and there are penalties if you don't file on time. The underused housing tax return that we mentioned, 2022 and 2023, the deadline for it will be April 30th. And the deadline to file individual income tax return with business income for sole proprietor will be June 15. That also is going to apply for the spouse of the business owner. Also, the deadline will be June 15, 2024. Deadline is June 15, but the taxes still needs to be paid by April 30th. And thank you for attending this presentation. And now we open it for the questions and answers.
شكرا.
I hope everybody's still awake.